Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is December 14th, 2012. Lots to talk about, so let's get started. But before I do, again, I just want to thank you very much for hitting that like button and responding to these videos. It does help a lot, if we can build a conversation if you want. But in any case, I'm pretty sure that most people that are watching my videos are very familiar with how to trade and actually know technical analysis and understand it. To be honest, if you didn't understand it, then you really wouldn't know what I'd be talking about, and therefore you wouldn't be watching my videos. But anyways, again, thank you very much. And what I want to try and do is talk about the SPY as quickly as I possibly can without rambling. No guarantees, because you know how I am with rambling. But I want to try to as best as can answer anybody's questions that they had in the previous video. All right, so without further ado, let's get started. This is the chart of the SPY, which is the ETF that tracks the S&P 500. And if you're new to these videos, then what you'll see are these pink lines and these yellow lines here. The pink lines hold or seem to hold a little bit more water than the yellow lines do, but it looks like a 50-50. Sometimes it can be a 50-50, but that remains to be seen. I'm still testing two different formulas. So basically these lines, these numbers here that you see on the screen, they're mathematically created with a formula that I invented last year in December. So basically this formula has been doing very well for 1 year, and you'll never see these mathematical calculations anywhere else. And the way you can tell when or what day I created these mathematical calculations is where the calculation starts, or where this line starts. For example, I created this 139.21 on October 10th. I created this 137.51 at October 19th, and so on and so forth. And this one was all the way back in September 7th. And the way I use these mathematical calculations, just as a quick overview, it's either going to be a intraday bounce or pullback, a daily bounce or pullback, or a gap. And there was one more thing, I forget what it was. But basically, these lines will indicate support and resistance on a pretty good, and it's been pretty much working. Obviously, nothing's 100% guaranteed. I'm not one of those guys who are trying to sell you something. I'm not going to tell you that this is 100% guaranteed, because it's not. It has failed from time to time, but for the most part, it's been working out fairly well. People who have been watching my videos for a while understand them, and they pretty much know when to take the trade or not. In addition to that, it doesn't mean that price is going to get into these levels. So don't think that it will. Basically, if say we were on this day here, don't go long because you think it's going to go up into these two levels here. It's really a matter of if it does get to the level, whether it would be a bounce or a pullback, if it tags it. And I don't just use these mathematically calculated levels. I also use other indicators such as pivot points or consolidation areas or moving averages and so on and so forth, because I want to put the odds in my favor that it's going to go in the direction that I need it to go. And I'm a very cautious trader, as you all know, and that's why I rather not be in the trade than lose money. Okay, that's just the bottom line. Anyways, moving forward. So let's see. Okay, so this candle here is Monday's candle. All right, as you can see. Alright, so in the previous video I said that because of this consolidation area here, I wouldn't wait to short at the 144.07. I would actually wait to short and short it at the 144.30. And the reason is we have this upper trend line over here, and I know we discussed this in the previous video, but this is just a quick recap. And we also went straight into this area of resistance here. There was a potential that we could have gotten into the 145.07, but what I did was I used that as a stop. And what I mean by that is if I got a close above this guy, above the 145.07, then I would have stopped myself out for a small loss and not a big deal. Just so happens these mathematically calculated levels, including this upper trend line here, gave enough for me to take a short at the 144.30 level, and it's just been falling ever since. Now, what does that mean? Well, what did I do? I didn't really short the SPY. I actually bought the SDS long, which is actually short the SPY. And the reason why I do it is because the SDS is a 2-time short and it's a little bit cheaper. So, in percentage wise, if the SPY goes down 1%, then you should see an increase of 2% on the SDS. It's not exactly like that, but it's pretty much the same. So we had this on Monday, and then let's see, on Tuesday we went right into this 144.07. I waited until it got into this. That's what takes patience and discipline, right? Even though I would have missed a trade if it started coming down at the 144.07, I held it in, and I waited until it got to the 144.30. It pierced it. It went all the way up to the 144.55, but I still got it. I still got in at the 144.30, and my order was filled there. All right, so on Wednesday, as soon as it came down, towards the end of the day, I had already put a break-even stop on the SDS. Therefore, if on Thursday it went against me and went back into the 144.30 and possibly into the 145.07 level, then I would have gotten stopped out break-even. No, no big deal. It's like I never took the trade in the first place, and then I take another short at the 145.07. Okay, so you see, that's kind of like how I work it. As soon as it actually goes into the direction that I want it to go, then I already automatically have a break-even stop. Therefore, if it does go against me, whether it be news or federal manipulation and whatever the case may be, I get stopped out, break-even, no sweat off my back, not a big deal. I just wait for the next trade and enter again. The next day, on Thursday, we go lower, and then from here I have a in the money stop. What I mean by that is I increase my stop, so even though it does go against me, I get stopped out, not break even, but in the money. It's not going to be very much, but it'll be in the money. And then obviously on Friday, which was today, we had a little bit more downside. Now here's the thing: we went right into the 50 moving average. This could potentially bounce. Why? Well, it's simple. We have the 20 moving average creeping up over here. We have the 50 moving average right here. We have all this consolidation area right around here. We have this gap over here. There's some support here. It's not a whole bunch. It's not a lot. But one thing to keep in mind is that this is the year. This is the month of December. December, everybody goes on vacation. Traders aren't really trading out there. You know what I mean? You guys might be not trading now because you guys are on vacation. I don't even know if you'd be watching these videos if you were on vacation, but in any case, you get my point. The point is volume is going to be lower, and it's going to start to decrease. And obviously, every time I harp on volume is the biggest thing for me. Reversal patterns need to be on volume, etc., etc. This one here, the volume was just a little higher from the previous day, which was yesterday, but it's not 3 times higher, meaning it would have to be this high to be higher than the past 3 days. So this could potentially reverse, but I wouldn't go long because of it, just because it's on the 50 moving average. What this indicates to me is that there's a possibility that we could go all the way down to the 20 moving average. So to make a long story short, with lower volume, because there's going to be less traders trading, you have to give an upside bias, which means I don't think this downside is going to last for very long. Okay, so that's my whole point, and that's why if you are short, if you did take the trade here where I kind of said that I would have, or where I did say I would have taken the trade in the previous video, was right in this area here, then you would have a break-even stop if you wanted to have a break-even stop, or in the money stop, meaning if it does go against you, then you get stopped out in the money. Not a big deal, because I think this thing is gonna, it's not gonna last long to make a long story short. All right, now what do I think is going to happen? Well, if you notice here, we had a pivot point here. This is considered a pivot point in my opinion, and this is also a pivot point here. This is a high, and this is a higher high. This is a low, so there is a potential that we could come down, maybe bounce off of this 139.21, and then guess what? Now we have a higher high, which means that would validate a trend change on the daily chart, which would also confirm the weekly chart. Let's take a quick look. If you look at the weekly chart, let me just delete all the drawings here. We don't need to see this right now. We have this low, we have a higher low over here, and then we have a high, and then obviously we have a higher high. Okay, so the trend is still up on the weekly chart. However, take a look at this. We have a little bit higher volume than we did last week. We do have a gravestone doji candle over here, but again, you guys know me. This volume needs to be higher, at least than the past previous 3 days. We do have an upside here, which will confirm. So 1, 2, 3, that validates that this could be a potential gravestone doji, and this thing could bounce off of this 20 moving average, but it's, it may not go very far because the 50 is just creeping right under it. But long story short, we are still in a confirmed uptrend on the weekly chart, and nothing has changed that yet. Until that changes, we still have to assume that this is going to continue higher on the longer term, obviously, because this is the weekly chart. Now, if this happens to be a pivot point and we start heading down lower, then the trend could be changing on the weekly. But again, I rarely look at the weekly. Only to validate the daily will I look at the weekly. The daily, because we are short-term traders, is pretty much the farthest that we need to go. So let's go back to the daily. Alright, so back to the daily here. Let me just load my drawings up one more time. And then okay, so let me just tell you what I'm going to do now. I'm currently short the market by going long the SDS. In fact, let me switch to the SDS and let me show you what I did. Alright, on the SDS, I have a mathematically calculated level here at 56.51, at 55.39, and what's interesting is this candle actually closed at 55.38, which was 1 penny off of this mathematically calculated level. Now, we all know the pink line holds a little bit more water than the yellow line, so why didn't I stop myself out for a profit? Because I still think that there is a possibility that we can get to the 56.51 level, and then in which case I'll dump my SDS. Maybe well I'll dump my I'll probably dump 100% of my SDS if we ever get to this level, and that's a scary one. And the reason why is because we have these two moving averages coming close together. Whenever you have moving averages coming close together, that comes close together and then possibly crosses over, is where you're going to have a lot of resistance, or in other words, support. If you just look at this area over here where you see the two moving averages crossing over, you can see the SDS had a nice bounce off of that cross. So when these two moving averages do cross over to each other, there's a possibility, say the 50 goes higher and the 20 goes lower, that this guy could just reverse right here already, which is why I have an in the money stop just in case it does get to the 56.51 and possibly even the 57.86 level. We never know, right? But regardless, I'm in the money. There's no reason why I should be losing any money. If anything, I'll be making money, and what I do is I just let it stop me out. It's not a big deal. It's good to go, and that's how I play shorting the SPY, which is going long the SDS. All right. Alright, so now let's just say you actually did a outright short on the SPY. That's no problem. So what I would have is, again, an in the money stop. Right now we could have a potential bounce off the 50. We could have a potential bounce off the 20. There's a whole bunch of minor support over here, but because there's so much support levels here, it could turn out to be a little bit more strong. You just trail your stop basically and let this market stop you out for profit. Okay, that's the way I would play it. When would I go long? Well, you have this pivot point here, you have this pivot point here, you have the 200 moving average. So as a cautious trader, what I would do is actually wait. If it ever gets into the 139.21 level, that's when I would go long the market. Any earlier, I probably will not do it, depending on what I see in the dollar. So that's how I'm going to play this market. Again, if you're new to watching these videos, I'll go long only if it gets to the 139.21. That does not mean I'm going to go short now because I think it's going to get to the 139.21. There's a difference, okay? Let me switch to the dollar. Alright, this is the chart of the US dollar futures, and this is the pretty cool chart here. As you can see, we went all the way up into the 200 moving average, came down, and we had some resistance at the $80.61 level. And then of course we pulled back. But what's interesting is around this area here, which was 12.12. 12.12 was Wednesday. So Wednesday we had that down move in the markets, right? I really didn't want to take the short trade on the SPY simply because the dollar didn't line up with it. Okay, but the dollar, because the dollar doesn't move penny for penny, it moves tick for tick. The dollar can make a dramatic move such as this one here, create a reversal candle, okay, while the markets does its thing. And so basically I made my technical analysis trade, or my trade was based off an analysis purely on the SPY. But what I like to do, because I'm a cautious trader, and this time I wasn't so cautious, I need to make sure that the dollar is in perfect harmony with the markets. If the dollar is indicating that there's a potential it could go lower, then why would I want to short the markets now? So this previous trade, just let me remind you that it was a little bit more risky because I did not align it with the dollar. Now, but what the dollar did was it actually came down, okay, tagged the bottom trend line here. Now this trend line I never moved from, I don't know how long ago, and since I drew it, it bounced perfectly off of this trend line. Okay, you see that, and that's why we got that down move in the markets. The very next day, which was Thursday, we created a doji candle. This was actually a reversal candle on the dollar. It wasn't necessarily that much of a reversal because again, we have the volume. You guys know I need at least 3 days of higher volume. Right now this volume here was only higher for the past 2 days. Including that, I need at least 3 days to create some sort of pivot point. Right now I had two, one, two, right? So this wasn't a solid reversal, but it was a solid candle reversal. But nothing, the patterns didn't line up for me to actually consider that the dollar would continue higher, causing the markets to go lower. So I didn't think that this was going to be that much of a reversal. The next day, I was like, wow, you know, that's a doji candle. Maybe it might reverse even though there's no volume. But sure enough, on Friday, we take a dump on the dollar, and now we're going to have to retest this here. Now, think about this. There is a possibility, again, once you hit any level, whether it be my mathematically calculated level or a trend line or whatever the case may be, once you hit it, I don't rely on it as much anymore. So if this guy comes back down to retest this bottom trend line again, there is a possibility that we may break down from it. And if we do break down from it, we're going to tag this 70, or we're going to test the 78.74 level, which I previously made in September the 10th, which actually it came down right into it perfectly. And what that would actually do is be a double bottom plus this mathematically calculated level, and then we're just gonna have to see what happens from there. But that's pretty much what the dollar looks like for now. I'm already in 16 minutes, so I'm gonna cut this short. There's some questions that I want to get to as soon as possible. So if you're not interested in the questions that were asked, then this is pretty much my analysis, and that'll be that. Okay. Okay, cool. So the first message from Favco 2010. I hope I'm saying that right. FAVCO 2010. It says great. Okay, so you want to see analysis on silver, oil, and volatility. So okay, well, let's take a quick look and see what we can get here. All right, first of all, let's take a look at silver. I'm looking at the ETF for silver, which is the SLV. And this looks like some old analysis that I did previous in older videos. You know what? Let me do quick calculations here, and let me see what I can get. And I'll just do this on the fly while you guys are watching me, so you can kind of see how I get it done. But before I do that, let me just get the calculation in first. Alright, so I got two mathematically calculated levels here, and that's one of them is 28.75. The only thing I like about this mathematically calculated level is you see this pivot point here. It kind of lines up with that, so that's cool, but don't know if it's going to get there anytime soon. We also have this $30.11 level here, and we also have this pivot point over here, so that looks pretty good, and it's also in the 200 moving average. So for me, if I wanted to roll the dice here, I mean, it's not a real solid thing that I would actually myself take a trade. And before I get into talking further, under no circumstances am I making a recommendation to buy or sell any stock or ETF or anything like that. Okay, so this is just purely my opinion, and this is just when I look at this chart, this is what I'm thinking in my head. Let's see, what else can we see here? We have this trend line over here, and if I draw this trend line, what I see is that we actually broke down. Did we confirm or validate this breakdown? The low of this candle here was 31.18. The close was 31.17. It's too close for me to say that it's validated. It would need to close maybe another day below this candle here to validate that it actually broke down from this bottom trend line here. And to be honest, I really don't like this trend line too much here. I mean, these aren't big pivot points. They're pivot points, but they're not that big. So I really wouldn't put too much weight on it. If the way I see it now, if I wanted to roll the dice here, I would, if we went actually straight down into this $30.11 level, and we kind of just sold off real quick, then I could potentially be a buyer here for a small little bounce. Another thing you want to keep in mind is that we have some lows here. We have a pivot somewhat of a pivot here. We have a higher low over here, so this would indicate a possible uptrend. But if you look here and you look here, this would indicate a possible downtrend because we have a high and a lower high. So when you see a higher low and you see a lower high, what you can pretty much determine is that there's going to be a triangle, and sure enough, we have this triangle here. And I like triangles because triangles is something that's pretty powerful in my opinion. So let me just draw a triangle over here, and this is kind of a rough triangle because I know I'm running out of time here. But I always get the, you guys know from my previous videos, I always get the middle or closest to the middle pivot, and at breakout, this is where I would expect it to go. So actually this broke out here. Of course, nothing goes straight up or down, but this could be a possibility. And let me see if there's something around this level here at the 2775. I'll be right back. Alright, believe it or not, I actually have a mathematically calculated level here at 2773, so it's pretty darn close. Now, this is an expectation that if we go down lower here, well, I don't know, I mean, that's a far ways down, so that's going to be a very big one, meaning a big iffy one, okay? So you just keep that in mind. Would I actually take the trade here at the 3011? Again, for me, no. And would I take a short over here? For me, not really. And the reason is, yeah, this is nice that it's a breakdown. And what you could potentially do, right, is you could actually short it here if you wanted to. And if you get a close above this bottom trend line here, and then you know, you tag this and you validate it again. So say, let's see, this is so hard to explain. Let me just load this drawing up one more time. Oh, I didn't save the drawing. Hang on. Alright, I saved the drawing this time. Okay, so what basically what I'm talking about is, let me zoom in here. If you get a close above this bottom trend line, okay, now I mean a close doesn't mean if it goes up and then pulls back, it doesn't count. It has to close above here. And then another day you close higher than the previous high, then I would stop out. Okay, so you know, it's a pretty close stop. So in a lot of ways, sometimes it's not a bad deal if you wanted to just short it here. But again, it's not something that I would potentially do because I'm a little bit more cautious. To me, this would be a little bit more of a gamble. Okay, but that's what I think about the SLV. I do think that the SLV is building some power and it could potentially drop lower. Okay, that's just my opinion though. All right, I have another question here. I'm sorry. Silver, oil, and volatility. Gee, you know, I'm already into 22 minutes. You know, I would love to do more for you guys. You know what? Okay, hang on. From now, I'm gonna do everything that you guys have asked because I do appreciate you guys posting. So you know, I'm not gonna deny you of that. And you know, my opinion is really not that great. But you know, if you guys want me to do analysis on specific stocks or anything, maybe just one stock might be good. That way I can do a little bit more detailed analysis on that stock that you're looking at. And because if I do, you know, oil, silver, and volatility, and somebody else is asking for AMD, BAC, and NOK, etc., it's the video is just going to be hours long. And trust me, I don't mind doing it, but you know, because I love talking about this stuff. But you know, it's just going to make the video that much longer, and a lot of people don't like that. So anyways, just for now, for these videos, I'll do, you know, everything that you guys asked. But for in the future videos, you know, just pick the best one that you really want, and then I'll do an analysis on that. Or if you give me three, which would be good, what I can do is I can look at all three offline and pick the best one out of the three that I like, that not necessarily I would trade, but I would like to talk about because it would make sense. Okay, so anyways, let's get to it. When I talk about oil, I talk about the USO, which is the ETF that obviously tracks oil, and I do have this 3311 and 3108 levels, which were created on September the 19th. I had this, oh, this is a perfect example of the triangle. I got this middle part over here, and then I put it at the breakout. Let me just make sure that that's where it came from. Yep, perfect, just like that. Put it at the breakdown, and then it landed just right there. It actually even went lower. In any case, right now oil is just trending sideways right now. It's in a sideways, what is that word called? It's a channel, a sideways channel. You can play the channel if you want, but the the bad part about this channel is we got these two moving averages over here that could potentially be pushing this guy down. Right now we have this down move. This could be some messy consolidation here, which could potentially drop down lower. So what we want to watch out for, because these are two mathematically calculated levels, they're not off of any pivot points or anything like that. If we close above and we validate above that close again, same thing that we could see some higher prices in oil. And it would make sense because QE4 was released. We had all this commotion on Wednesday and whatnot. I didn't want to get into that, or it's just going to make this video that much longer. But to make a long story short, it's the same. On the bottom, if we break down from this 3108 level and we validate that breakdown, then I think oil would be heading lower. But right now, I just think it's in a sideways channel right now, and right now, oil just doesn't know what it wants to do. But with auto quantitative easing and stuff, it's going to raise the cost of oil eventually and the price of food. So there is a potential that oil could go higher. So I mean that just remains to be seen. Would I trade oil right now myself? Probably not. It's just there's nothing good that I can see that gives me the that kind of odds to be put in my favor. All right, so let's take a look at the weekly on oil. We have a high, we have a lower high, and then we have a low, and then what we have is maybe a higher low. So again, we have this triangle pattern, right? Whenever you see that kind of thing, and right now we're kind of like consolidating bearishly, and we could potentially head lower off of this triangle. When it's a symmetrical triangle like this, it could break up or down, so it's just something that you want to be aware of, but wouldn't necessarily trade off of unless of course you wanted to. Obviously you guys are definitely good traders. If you're watching these videos and understand what I say, then you obviously have that experience under your belt already. All right, so let's check out the volatility here. Alright, volatility, I'm just going to assume that you're talking about the VIX. And then let me just load my drawings here on the VIX, and I have none, so give me 1 second. Alright, this is the daily chart of the VIX, and let me just draw a line over here. Draw a line over here. Again, we have this triangle pattern. Yeah, and because the moving averages are all over here, I really don't like it when the moving averages are so entwined or ingrained with the actual price. It just tells me that it could actually go either way, and sure enough, it makes sense because it is in a symmetrical triangle. Now let's just say the VIX breaks out of this triangle. I would wait till it actually closes above this 200 moving average first, validates that move, and then you can pretty much determine that the VIX should go higher. The VIX does move pretty quickly at times, so you just want to be cautious with the VIX. And from here, it is the fear indicator. So let's just say it does break out, then we're going to break out all the way up there, which would coincide with this double top here. But keep that in mind. I mean, with the fiscal cliff and all that, when the fear indicator goes higher, the markets should go lower. The VIX is obviously like the dollar. It's inverse to the markets, as you probably already know. And that's just it. I tried to do a mathematical calculation on the VIX, and right now, let's see, the highest point, the way I get the mathematical calculations, the numbers I need is based off of a specific pattern that most stocks make, especially the markets. But when it's jagged like this, when it's in a sideways channel like it is now, I mean, you could pretty much just draw lines here and it's in a sideways channel just like that. The mathematical calculation doesn't work as well, so I really don't want to use that mathematical calculation on here just in case it's just not going to be as solid. Okay, I just want to be honest with you guys. Again, I'm not going to try and sell you anything, so I just want to make that as honest as possible. Okay, anyways, I hope this helps. For the next question, can you please do an analysis video for AMD, BAC, and NOK? Alright, for AMD, I did do an analysis previous to this video, and I came up with $2.98 for a short. I also came up with a $3.57 for another short, which is would be higher. Now the $2.98 short would be a temporary short, but there's something to keep in mind. Again, even if this was a $50 stock, I really don't play anything under $5, just because it's to me it's just a little bit too cheap, and the volatility is a little bit too fast for me sometimes, because you buy so many more shares. But in any case, to make a long story short, AMD has just been getting pummeled. It's just been getting demolished. The trend is obviously down, and the weekly, I can pretty much guarantee you that's going to be down too, just by looking at this. Now there's two things to consider right now, and they conflict with each each other. Okay, we have this huge downtrend here, so obviously you want to trade with the trend. However, you notice when I do trade with the trend, the trend is short. You want to catch the trend when it's like, say the trend started going down here, and say maybe it's around here. Yeah, the trend is down, you want to short and you want to go with the trend. But when you have a down move with a trend this long, there is a potential that the trend will fail and start to reverse higher. That is a potential, and that's why I do not like going long or short on these kind of stocks, because if I continue to go short on AMD and then AMD decides to reverse higher because it's just been pummeled, right, then obviously I'm losing money because I'm going with the trend. The trend obviously can easily change the farther down it goes. Doesn't necessarily mean it will. I mean, if you look at a stock like Netflix, I mean, that thing was just going down for days, months, right? But in a case like this, it's been a very long downtrend, so there's a potential that it may bounce higher. But also, rule of thumb is you don't want to trade against the trend, right? Trade with the trend. The trend is your friend. So that's a conflicting thing that I'm talking about. Just based on very basic technical analysis, which is the trend, to me, I would not trade this stock because it's just been going down and down and down just a little bit too much here. But just as a short term, if you had to, someone's had a gun to your head, you do have this up move here. We are consolidating bullishly for a potential of getting into this 298, in which case this would be a counter trend trade if you were to short it for another move up to the 357, and that's even if it gets there. Now, to make a long story short, if this guy goes straight into this 298 in a single day, I may stay away from it and wait for the $3.50 level to short it. But again, this is just something that I wouldn't trade. This would also be a gamble in my opinion. But I can understand why you would be intrigued to trade AMD, because it is a cheaper stock and it is a big company. I mean, it is Intel's only competitor basically, for what they do. But to make a long story short, I just would stay away from it as of now. One thing you do have in your favor is that the price has closed above the two moving averages here, which does show a little bit more strength. It's showing, I mean, if you look at it, it's never closed above the moving averages ever since the trend changed. Okay, ever since the trend changed, it came down, down, down. It was never able to close above the 50 moving average, in which case, from yesterday, it was able to close above the 50 moving average, which means that, that does show some positive reinforcement. So if you're already long in AMD, then just have your stops in place. The stops are the most important thing. I can't tell you where to put your stop because I don't know where you entered if you are long. But if you are long, then it does look good that one, we have low volume coming up because it's the end of the year, and two, we were able to close above the 50 moving average, so that is a plus. Last but not least, we are, and AMD is a little bit in the oversold area, so there is a potential this guy could spike just a little bit higher. But again, I really kind of shy away from anything that runs under $5. Okay, but anyways, let's move on to BAC. I had previous prices already made for BAC. I guess at one point I was following them, and they have this I guess I drew this trend line here, which is kind of crooked if you ask me. I don't even know why I drew it here. Let me just straighten it out just a little bit here, just so it looks a little bit better. Well, I don't even know where this guy ends up. Give me 1 sec, I'll be right back. Alright, so for BAC, and for me, again, this is a stock that I probably wouldn't trade, but here's the thing, okay? It doesn't work for me. A lot of people play the consolidation patterns, but I necessarily don't do it because it just doesn't work for me. But if you wanted to, what I would do, or if I had a gun pointed to my head and I had to say, okay, would you go long or short? And I would be like, okay, well, I'm taking a look at this and I see this up move and I see this bullish consolidation, okay? But we have already this huge long up move here. We have QE4 already coming out, which, by the way, really didn't affect very many people, which is why I love technical analysis, because it really shows the emotions of everyone. So basically it doesn't matter what you think, it's what the general population of traders think. In any case, I would wait for the 20 moving average to come up, for price to go into the 20 moving average, then I would initiate a potential long trade if I absolutely had to do that. Okay, now I had these two lines up here and I was wondering what that was previous. Well, we have these two pivot points over here which could indicate some resistance. So if if I had to take this trade, I really wouldn't, because again, this doesn't work out for me. If I had to, then what I would do is I would definitely wait for the 20 moving average to come up, for price to hit the 20 moving average, then take a long trade and see if I can get up to into the next resistance point. In which case, I'll just dump it from there. So it's at right now at $10.58. If it stays there at 10.58, let's just say we get it for 10.50, right? It goes all the way up into 11.25. That's a 75% prof, 75% profit, not 75 cent profit right there. And that's money in the bank, and I would get out as soon as possible. But like any trade that I make, as soon as you're in the money, you put a break even stop, and then you can get greedy. Worst case scenario, you get stopped out break even. That's a common worst case scenario, but there are some times where the next day you'll gap down, and then you'll get screwed and stop. But you have to protect yourself. That's the bottom line. All right, taking a look at the daily chart of Nokia. That's pretty cool. I don't think I've ever done an analysis. Oh no, it looks like I did. Wow, where did that come from? All right, well, I think, well, when did I make this? I made this at on the 12th. Okay, so this is probably something I was looking at after you posted your comment to look at this, so I actually looked at it. All the way over here, you have some consolidation. You have these pivot points over here, so this looks like a pretty good spot with the $5.53. This is a mathematically calculated level. Let me see if I can get a fib level off of this to see if that helps any. Again, I really don't depend on fibs too much, but I like to use it in cases like this. And nope, there's no fib level there, so yeah, I don't know. I mean, if anything, I would initiate a short at the 553. Now, consider this though. We have the 3 moving averages all under price, which is telling you that this stock is fairly, it's not in strength necessarily, and it's a cheap stock, right? But it does have some strength. I mean, it is in its favor that because all the moving averages are below price, that this could potentially push higher. You have a low, you have higher lows, you have a high, and you have higher highs, so the trend is up. Just keep in mind that you do very closely have a gap window here, and then you have a gap fill all the way up here, which means that you're going to run into some resistance if you're not already long. Would I trade this now? Probably not, because even if the 20 moving average comes up here and the price goes into the 20 moving average and then you take a long trade, I mean, it's not going to be that profitable, because you're probably going to get a nice pullback around this area here. But I mean, you could do it if you wanted to. It's just something that I wouldn't do. And again, it's a stock below $5, so it's just not something that I play. It's not because I don't believe in playing with stocks below $5. It's just not something that I'm very lucky with, I guess you could say. Like if I depended on luck, it would go against me if I played anything under $5. That's pretty much it. There's nothing wrong with it, is what I'm saying. But just doing an analysis on this, that's pretty much what I see. I don't see any reversal patterns. What I see is more consolidation patterns. Like this one is a consolidation pattern to potentially push higher. Oh, look at that. We have actually this pivot point. We have this gap window. Yeah, this is going to be pretty good resistance here, unless you get some crazy news. And the thing about stocks under $5 is they could easily pierce and punch right through this resistance line. And it's because, they're cheaper stocks and price moves a lot faster. Okay? I wouldn't say price moves faster. I would say percentage of price moves a lot faster. Now the last comment I have here is, can you do a few more stocks with the market and show how you get into the trade? All right, I don't want to. I'm already into 38 minutes, but I'm still gonna say it. I'm still gonna explain it anyway for PW 2006-88018. Okay, and this one for AMD, BAC, and NOK was for Mike. So let me just really get into it real fast. Give me 1 second to switch back to the SPY. So for PW, I already did those bunch of stocks and ETFs already, so I hope that was good enough for you. In future videos, I'd like to do more like Amazon and Apple and stuff like that. Cover the tech sector, the financial sector. So maybe I'll do JP Morgan. That'll give you a good indication for BAC. Maybe I'll do Intel instead of AMD, but then that'll pretty much give you an idea on the chip sector and so on and so forth. But regardless, I mean, feel free to put whatever you want. Put a comment, and maybe I can pick and choose which one. One from everybody, and see if I can do an analysis on that. But for now, an actual stock pick, maybe I'll let that happen for the next video. But anyways, to answer your question, PW, is how do I get in? How do I get into a trade? What I normally do is when I have a mathematically calculated level such as this one, and like in the previous video on Monday, I said I'm going to wait for it to get into the 144.30 level. So what I do is I put in an order to buy whatever shares you want, like 1,000 shares of SDS or whatever. And what I do is I say if the SPY reaches 144.30 to trigger a buy of the market price of SDS. Or what I'll do is I'll do a mathematically calculated level for the SDS and buy it at that level. So for example, let me give you an example. Well, in this case here, all right, so in this case here, this is a chart, the daily chart of the SDS. This is what I use to go long, to short the SPY, simply because it's a 2-time ETF. That's the only reason. You know, I'm a little bit more greedy than most people. I had a level here at 53.98. However, I actually took the trade at 53.45. Wait, what was the low of this candle? 53.53. Okay. Wait, that was a low of this candle? 54.47. Maybe it was 54.45. I forget. Let me check. Hold on. Alright, I'm sorry. I was thinking about the SPY. Alright, so here's the deal. I had a mathematically calculated level here at 53.98, and it seemed to align up with the SPY. So what I do is simply what I simply do is I put in an order for 53.98. In this case, probably a 54 flat, right? Because I kind of want to round it off because it's not perfect, right? So when I put in an order to go long in the SDS for 54 flat, it would be a limit order. So if it ever gets to that price, then it would trigger my order for whatever the amount of shares I can get without using all my capital. Obviously, you don't want to use everything. As soon as that price of 54 hits, then it triggers and it automatically picks up the shares for me. Okay, immediately after that, once it goes up into my favor, I'll put a break-even stop, and that's all she wrote, because now I can play greedy. If it goes up, great. If it pulls back and continues down, then I stop out, break even, not a big deal. And that's normally how I play it. When I get into the market, it's all preset. I have a full-time job, so you know I can't be at my computer 100% of the time, even though I want to. On my vacations, I day trade. Okay, so on my days off, I day trade. Sometimes I have to work at 3 o'clock in the morning, so you know, my office lets me stay home. The next day, I'm trading. Okay, I'm day trading. Okay, so the only time I get to day trade is when I'm off from work, but I'm definitely a swing trader, and in order for me to swing trade, I need to have everything preset. I use OCOs, which is order cancels order. I do the other one where order triggers order. I do the order triggers the trigger order cancels order kind of combinations, and that allows me to be able to control price based on my mathematical calculations, which is the whole reason why I actually created this formula, or tried to create this formula, which is working out pretty well in any case. But just like, you know, just like this, the 55.39, I could have a limit order in there to sell at 55.39, and I would have sold it today. But again, I got greedy, and I'm waiting for the 56.51 level. If this does pull back and goes all the way back down to 54, I get stopped out, break even. I do include commission into that break even, so that means that I don't actually sell it at 54. It's a little bit above 54, simply because when I break even, I want break even, meaning I don't want to see any red in my account. There's no negative thing in my account at all. Okay. So in the case of actually shorting the SPY, what I would have done was say at 144.30, and a lot of times this is what I do because it doesn't line up with the SDS. I say if the SPY gets to 144.30, I want to short it, and then boom, my order goes in, and I sell the SPY, sell short the SPY, and then I have a break-even stop, and then I cover my shorts when I feel necessary. And in this case, I think we'll cover my shorts at maybe possibly at a 20 moving average, but I'd like to cover it at the 139.21. Wouldn't it be good? Because I told you earlier that I would go long at the 139.21 if it goes straight into it. Wouldn't that be perfect? Because then I would make money going down here, and then I would just turn my trade around and then go long. But you know, to be honest, I'll be honest with you, I don't think it's even going to get to this 139.21 due to the low volume and all the news that's coming out with QE4 and blah blah blah. Um, so I might miss the trade going long, but you guys know me, I miss trades a lot, but it keeps me safe, right? I'm a very cautious trader, and that's what I need to be, because I'd rather miss the trade than lose money. That's, that's just the thing. Again, I've lost so much money in the past, more than I'd like to admit. And I'm telling you guys this because I'm trying to be honest with you guys, that I don't know anybody that hasn't lost money, but I do know that people who have lost money are the ones who didn't have stops in place, they didn't have the discipline, and they didn't have the patience, and that was me. And guess what? Unfortunately, that is still me, and that's because I am human, and humans have emotions, and that's what kills you. The emotions kills you as a technical trader, because you start thinking, oh, maybe it's not this, maybe it's that. The whole reason why I took this trade here, even though I told you that the dollar didn't match up or line up with the SPY, is because on a technical level I had to take this trade. I really didn't want to take this trade. I'm glad I did, but I really didn't want to emotionally, simply because the dollar wasn't lining up, and I was kind of feeling like, well, they're gonna release QE4. What am I thinking? I'm stupid, right? But you have to be consistent when you have all the signals. I had the signals here, right, to take a short trade. It wasn't to these levels here. The volume wasn't the greatest. There wasn't a reversal candle, but it was still a trade, because this previous candle here was a shooting star on higher volume. So that proved to me that this could have been the reversal candle here, right? But I had the patience, I had the discipline, I waited for it to get into this upper part over here. It went right into my two mathematically calculated levels. I had to take the short. I didn't have a choice. If you're going to be a technical trader, you have to take the short or the long position every single time, because you need to be consistent. If you pick and choose, you might pick and choose the wrong time every time, and that was the problem that I had in the past. And I'll be honest with you, my emotions still get the better of me sometimes, and you guys can see it and hear it in these videos, and I'm just human, and that's just the breaks. Even the pros have emotion issues. One thing that really gets me and it really kind of upsets me is there's people out there on the internet that people subscribe to and pay for, and the guy will be like, oh yeah, go buy this stock, say BAC. They buy BAC, buy, right? Telling everybody buy BAC. And then if BAC goes into they say buy BAC long, and say BAC starts pulling back, it's going lower, then in their next video they just never mention BAC, like it never existed, and they talk about this other stock that they mentioned before, and they just blow it out of proportion and say, this is the stock, this is the one I told you to choose. You see, I'm the man, I'm the best. You should join up and pay this monthly fee. For me, if I'm wrong, I'm gonna tell you guys straight up, hey, I made a mistake, I was wrong, but hey, that's just the way it is. That's trading. That's if you're not able to lose money in the stock market, then you should not be trading, because you will lose money in the stock market, and that's just my opinion. Well, nothing's 100%, obviously. You could be one of those really good guys and never lose money, but then you may not be watching these videos. In any case, I appreciate you guys responding to my previous video. It makes me happy to see that. It makes me happy to see you guys clicking the like button. Feel free to ask for any more analysis. I'm very sorry that this time around the analysis I was giving, it wasn't really, probably not something that you wanted to hear. It's just my opinion that there's certain stocks that I look for, in which case I will take the trade. And to answer PW's question, in the next video, maybe I will have a stock pick of my own instead of doing an analysis on other people's stock. But feel free to put down what you want, and maybe I'll just, if you have 3 stocks, maybe I'll just pick 1 out of the 3, or whatever that case is. And thank you very much for watching this video. Geez, I'm already into 48 minutes, but I hope that the next video is a little bit shorter. I should have said something earlier, but anyways, thank you very much for taking out the time of your day to watch these videos. God bless to you all. Good luck to your trading next week, and I will see you in the next video.